Hi, it's Tom Lydon here in Hollywood, Florida at the Inside ETF conference. I'm here with Jillian DelSignore, who's head of ETF distribution at JPMorgan. Great to see you, Jillian.
Thank you, Tom, always.
Yeah, great job at the Women in ETFs.
Thank you.
Breakfast this morning, very, very impressive. Well, you got to be thrilled the way that that's growing.
It's been absolutely incredible to see. You know, this is the 5th annual breakfast that we've done. Thinking back 4 years ago, how we were trying to scour through the attendee list to find women to invite, and we managed to gather around 100 women and 2 men.
Yeah.
And now here we sat today with nearly 400 people, men and women, in the room. It was incredibly exciting.
I'm proud to be a card-carrying member.
You were one of the first male members, as a matter of fact.
All right, let's get to business.
Yes.
As you look at 2018, there's a lot of things on your plate at
Yes.
JPMorgan, and you've already done a great, extensive job in your lineup in a kind of sophisticated way. So talk about that and really why you've lined up your ETFs the way you have at JPMorgan.
Absolutely. So honestly, as we look back over 5 years we've been building this ETF business, we've really wanted to build out our lineup the way an advisor would think about building out a portfolio. Equities, fixed income, alternatives, so that they can really be thoughtful about the way they're allocating to a client's portfolio. And we've done multi-factor equity, and now for those that want to be more precise, towards the tail end of 2017, we were able to launch single-factor ETFs. We've done the same thing in alternatives. Look, the bull market is long in the tooth. Advisors are looking to try to reallocate some of their assets into alternatives. So we've been having a lot of conversations about that in 2017 and certainly leading into 2018. Something like JPHF has continued to gather a lot of steam for those looking for a core allocation in alternatives. And then we've since been able to do similar to what we did within multi-factor and single-factor, take the sleeves of JPHF and make them available in the form of JPMF and JPED, managed futures and event-driven, for those that are trying to be a little more precise.
So hedge fund strategies wrapped into ETFs. Again, number one fear of advisors today is that we're going to see volatility go back to the mean. So as an advisor, you like ETFs, here's some strategies to consider, right?
Absolutely.
Yeah.
And look, volatility, one of the other areas that we've seen a lot of momentum has been with JPIN, our international equity ETF, where we all know that you need to be invested in international, or you should be invested in international equities, but it can be more volatile than most. And so the process that we have to try to minimize some of the downside volatility while allowing for upside participation has been quite attractive, and we've seen significant asset growth in JPIN, crossing over $1 billion last year.
Well, and the flows continue as more advisors are looking at the valuations here in the U.S. compared to overseas, and if you get to a great degree with your strategic beta strategy in JPIN, JPMorgan's discipline, and that's what's really key behind that, right?
It really is. I mean, you're leveraging existing investment capabilities from JPMorgan across our platform. Yas Ramahi's quantitative beta strategies business has been around for nearly a decade managing factor strategies. So this is being able to tap into that expertise across our multi-factor, single-factor, alternative strategies and continue to expand from there.
Great. Jill, as always, great seeing you.
Absolutely,
Thank you.
Tom. Thank you.